Bitcoin and XRP stand as two of the most well-known cryptocurrencies in the world, but they serve different purposes and have distinct characteristics. While Bitcoin has garnered widespread fame as the first-ever cryptocurrency, XRP is making waves in the financial industry for its focus on improving global payments. In this video, we'll break down their key differences, from their origins to their uses, and everything in between. You might be surprised by some of the factors that set them apart. Stick with us until the end, where we'll reveal something that could impact your investment decisions. Make sure to like this video, subscribe to our channel, and hit the bell icon for all things cryptocurrency and finance. 1. Purpose and vision. Bitcoin and XRP were born with vastly different visions, yet both are poised to shape the future of finance. Bitcoin's goal is clear: create a decentralized currency that operates without government control, providing individuals with financial autonomy. This vision has earned Bitcoin a reputation as digital gold. On the other hand, XRP was designed with a specific aim in mind: to solve the inefficiencies of the traditional banking system, especially in cross-border transactions. Ripple Labs, the company behind XRP, focuses on improving the speed, cost, and transparency of global payments. Bitcoin is the gold standard for decentralization and wealth preservation, while XRP's goal is to optimize the existing system by working with banks, not against them. 2. Technology and consensus mechanism. Bitcoin's blockchain is powered by the proof-of-work (POW) consensus mechanism. This means miners compete to solve complex cryptographic puzzles, and the first one to succeed adds a block to the blockchain. While this process secures the network and ensures decentralization, it comes at a high energy cost and results in slower transaction speeds. On the other hand, XRP doesn't rely on mining at all. Instead, it uses the XRP Ledger Consensus Protocol, where trusted validators confirm transactions. This method is faster, more energy efficient, and capable of handling thousands of transactions per second. XRP's consensus algorithm allows for more scalability than Bitcoin, which is crucial for its role in cross-border payments. 3. Transaction speed and costs. Bitcoin's transaction speed, while an improvement over traditional banking systems, can be slow compared to newer technologies. On average, Bitcoin transactions take around 10 minutes to process, though this can be longer during times of high congestion. Additionally, transaction fees are variable and can skyrocket when the network is busy, making Bitcoin impractical for smaller transactions. In contrast, XRP offers lightning-fast transaction speeds, typically processing transactions in just 3 to 5 seconds. This speed makes XRP particularly attractive for financial institutions and businesses engaged in cross-border payments. XRP's transaction fees are also incredibly low, often less than a penny per transaction. This makes XRP highly competitive when it comes to affordability, especially for sending money across borders. Bitcoin may remain the go-to choice for those valuing security and decentralization, but XRP's speed and low-cost transactions make it the better option for financial institutions and individuals who prioritize efficiency. 4. Decentralization and control. One of the key selling points of Bitcoin is its complete decentralization. The Bitcoin network is maintained by thousands of independent miners spread across the globe. This ensures that no single entity can control the network, making Bitcoin immune to censorship and centralized control. This decentralized nature is a cornerstone of Bitcoin's appeal as a currency that cannot be manipulated by governments or corporations. However, XRP operates differently. Although it is decentralized in its ledger, the network's validators are selected by Ripple Labs, and Ripple itself controls a significant portion of the token supply. Critics argue that this centralization gives Ripple too much control over the XRP ecosystem, leading to concerns about its ability to influence the market and decisions related to the token. 5. Supply and scarcity. Bitcoin's supply is capped at 21 million coins, a feature that ensures scarcity and helps drive its value. This finite supply, along with growing demand, is one of the reasons Bitcoin has been dubbed digital gold. It functions as a store of value in the same way that gold has historically done. XRP, however, operates under a different model. Ripple Labs pre-mined a total of 100 billion XRP tokens, and a significant portion of these tokens remains under Ripple's control. As of now, Ripple has released only a fraction of the total supply, but it has the ability to release more over time to manage liquidity. While this system allows Ripple to control the availability of XRP to maintain market stability, it also means that XRP is not as scarce as Bitcoin. This difference in supply dynamics is an important consideration for investors, as Bitcoin's fixed supply is seen as a hedge against inflation, while XRP's more flexible supply model allows for broader use in business applications. 6. Use cases and adoption. Bitcoin is often viewed as a store of value, a currency for the future, and a hedge against inflation. Over the years, Bitcoin has gained widespread adoption as a means of payment and as an investment asset. It has been adopted by some countries as legal tender, and institutions like Tesla and MicroStrategy have invested heavily in Bitcoin as part of their treasury management strategies. XRP, on the other hand, is focused on improving cross-border payments. Ripple Labs has partnered with financial institutions, including banks and payment service providers, to enable faster, cheaper, and more secure international transactions. XRP's use cases are more niche compared to Bitcoin, but its focus on solving real-world problems has led to widespread adoption within the financial industry. 7. Regulatory landscape. Bitcoin has been subject to regulatory scrutiny, particularly due to its association with illicit activities such as money laundering and tax evasion. However, its decentralized nature has made it difficult for regulators to control or suppress. Many governments have begun recognizing Bitcoin as a legitimate asset class, and countries like El Salvador have even adopted it as legal tender. XRP, however, has faced significant legal challenges. The U.S. Securities and Exchange Commission, SEC, filed a lawsuit against Ripple Labs in late 2020, alleging that XRP is a security and that Ripple violated federal securities laws by selling XRP without registering it. The outcome of this case could have far-reaching implications for the entire cryptocurrency industry, as it may set a precedent for how digital assets are regulated in the U.S. XRP's regulatory uncertainty has created risks for investors, while Bitcoin's more established regulatory framework provides a sense of security. 8. Investment potential and volatility. Bitcoin is often seen as a long-term investment due to its scarcity and growing adoption. Bitcoin's price tends to follow a cyclical pattern of boom and bust, but its long-term trend has been upward. As institutional adoption increases, Bitcoin's price may continue to rise, making it a solid choice for those seeking a store of value or digital asset that could appreciate over time. XRP, on the other hand, is highly volatile and has a different risk-reward profile. Its price is driven by Ripple's success in securing new partnerships and resolving regulatory issues, while XRP has the potential for high returns, especially if Ripple wins its case against the SEC. It also carries significant risk. Investors who are looking for potential short-term gains and are willing to take on higher risks may find XRP appealing, while those seeking a safer, more stable investment may prefer Bitcoin. 9. Community and ecosystem development. Bitcoin's strength lies in its vibrant and decentralized community. This community includes developers, miners, traders, and users who all contribute to the network's security, development, and growth. Bitcoin's open-source nature allows anyone to participate, ensuring that decisions are made collectively rather than by a central authority. In contrast, XRP's development is driven primarily by Ripple Labs. While Ripple is open about its intentions and the technologies it develops, this centralization can limit the community's ability to shape the future of the project. Despite this, Ripple's centralized development has allowed for a more focused approach, enabling quicker deployment of new features and updates. 10. Long-term outlook. Looking to the future, Bitcoin's long-term outlook is tied to its ability to maintain its status as the premier digital asset. Its growing adoption by institutional investors, as well as its position as a store of value, suggests that Bitcoin's value will continue to rise over the coming years. The fixed supply and decentralized nature of Bitcoin ensure that it remains a strong hedge against inflation. XRP's future depends on its ability to expand its role in the global payment system and overcome the regulatory challenges it faces. If Ripple can successfully navigate the legal landscape and build more institutional partnerships, XRP has the potential to become a key player in the financial sector. We've covered a lot of ground in comparing Bitcoin and XRP. Both have unique advantages and serve different needs in the crypto ecosystem. If you found this video insightful, don't forget to give it a thumbs up and hit the subscribe button for more content like this. Which cryptocurrency do you believe has the most potential? Drop your thoughts in the comments below. See you next time.